It's funny you mentioned the word like brokerage. I sometimes struggle with that term. Like, how do I describe? Because qualified versus non-qualified is just so hard to kind of wrap your mind around. So I sometimes call them like after-tax accounts or post-tax accounts. I think the most common term is brokerage accounts, but it's like any stock, bond, mutual fund that is not in an IRA or a 401k falls under non-qualified accounts. So just want to kind of clarify that. Sometimes people just assume or how to differentiate.
So again, 401ks, 403bs, IRAs, those are qualified. Everything else is non-qualified. So if it's in a non-qualified or a kind of always tax type of account, dividends from stocks that you might own are taxed as well. But like I said before, it depends what type of dividend is being paid. There's two ways. There's what's called a qualified dividend and a non-qualified dividend, right? So the next question is, well, how do you tell the difference? Well, in most cases, a qualified dividend is something that's paid by a company that's domiciled inside the United States.
Okay.
So let's just say, for example, you own shares of IBM, and that pays a dividend. It depends now. That will be qualified. However, you may still be subject to tax on the dividend depending on how long you've owned it. So for example, you've owned IBM for years. You're getting your dividend. It's a qualified dividend, right? And that is a lower tax rate federally. There's no benefit in the state. So a qualified dividend can get you a lower rate federally, as long as you've owned it long enough. However, if you bought it, say, last week, and the dividend pays tomorrow, you get no qualified status. So you pay federal and state as ordinary income tax. Non-qualified is typically international stocks that pay a dividend. Right? So the qualified nature of it is they're a U.S.-based company, you're a U.S. citizen, and then depending on if you get that qualified status or not, it's really around how long you've owned it.
Okay. So if we have qualified, we'll just talk about the wording, right? We have qualified accounts and non-qualified accounts, and now we have qualified dividends and non-qualified dividends. However, we're talking about the non-qualified and qualified dividends are all in your non-qualified dollars.
Right.
Everyone got that straight? Right. Hopefully there's no quiz at the end here. That's why we do this for a living, but my goodness, that's a lot
it's a lot to kind of handle and think about, where you just went from kind of normally paying your taxes through your paycheck or, kind of standard things to now I have to really start thinking about almost every decision you make in retirement potentially could have a tax implication.